Last week, Dr. Alex Karp was on Fox News, Fox Business, and he literally said, Palantir cannot keep up with demand. Think about that for a second.
Palantir, we just can't keep up with our product demand. We looked for and found ideal partners for our services. We are just breaking at the seams in the US.
At the end of the day, the name of the game is artificial intelligence, and Palantir is frontline and center. Above and beyond all the other posers like C3 AI, Snowflake, so on and so forth, who don't actually have a real artificial intelligence product. And we, the Palantir community, are banking that Palantir AIP conversion rate from offering free demos to 350 clients this year, 200 clients alone in the month of December. We're hoping that the conversion rate is going to actually be higher than we think, and that's going to increase our bottom line and increase our revenue. Besides for holding Palantir and waiting for monumentous milestones like Palantir AIP conversion and overall revenue, what if I told you that there's another way to make money, not only in Palantir, but in any stock that you hold? What if I told you that there's an ability for a triple threat, increasing and maximizing your revenue from shares held, minimizing and decreasing your risk for any pullback, and decreasing your overall cost basis for the shares that you purchased? If I told you all of that, you would probably think that I'm absolutely nuts and that's impossible. But I literally do this every single week. Now, I've been talking about this strategy for the better part of the last year. Some people got on this strategy. Most people don't even pay attention. But I'm going to tell you something really interesting. I use this strategy every single week. And last week alone, I made $10,000 using this strategy. And it literally took me 1 minute of work. Let me repeat myself. I did a trade that took me 1 minute. It's a pretty safe trade above a 90 percentile, and I made $10,000. So I increased and maximized, squeezed out every ounce of profit and revenue and return on my investment that I possibly can from Palantir, because I do this consistently. Because I increase the amount of return on investment that I'm making, I am decreasing and minimizing my risk to the downside. And finally, I am decreasing my overall cost basis because I am increasing the amount that I'm squeezing out. If you're curious how I do this and if I'm going to show you this, I am most certainly going to show you this. I do this by doing something called a wheel strategy. Predominantly, and in the simplest possible way to explain this, I am the bank. You see, 85 to 90% of options end up being expired worthless. When you are buying options, this sucks because just from the get-go, first quarter, you are asked out. The odds are against you. And unless you're somebody like my man Jesse and a handful of other people, you're essentially like most day traders, successful once or twice, but overall, you're going to be asked out and lose a shit ton of money. However, if you are the person selling contracts to the people buying contracts, well, the low assignment rate, the end up being worthless rate, that 85, 90% worthless rate is fantastic for you because you are the bank. You end up profiting from this. So what you're doing is the strategy is selling a covered call and then selling a cash secured put and doing it over and over and over again. In very plain English, if you own 100 shares of a stock, that means that you can sell an option on that stock. When you sell an option on that stock, you are selling a covered call. You are covering somebody's call. Somebody's buying, you are covering that buy with a covered call sell. The premium somebody is paying for the call, you are collecting because you are selling the covered call. The premium that you are collecting is yours to keep no matter what happens. And as long as the share price is not the strike price at the expiration date, you are good. You don't have to sell your shares. Let me explain. If you are saying that I'm willing to sell Palantir at $18 on a particular date, and Palantir is not $18 on that particular date, and it's actually lower than $18, you don't have to sell your shares of Palantir. Your premium is yours to keep, whether you have to sell your shares or you don't have to sell your shares. If it's above 18, you do have to sell your shares. But before that happens, you could do something called rolling, where you're pushing the contract forward. The opposite is if you end up selling your shares next week, all you're going to do is sell a cash secured put. A cash secured put is quite simple. You are willing to buy shares at a specific strike at a specific date. And by doing this, you are collecting the premium when you are selling a covered call, and you are collecting a premium when you are selling a cash secured put. The premium is quite lucrative. Somebody asked me in one of my last videos, Adam, what about taxation? And I'm going to show you a play in just a moment. So, don't go nowhere. What about taxation? Taxation is pretty simple. If you are trading from a tax deferred account, you don't have to worry about taxes until you retire. And there's different accounts. There's HSAs, there's Roth IRAs, there's traditional IRAs, there's SEP IRAs, and a couple of other IRAs, which stands for individual retirement account. But you don't have to worry about the fluctuations week to week until you're ready to retire. If you are trading from your brokerage account, any premium collected is going to be taxed on a short-term capital gains basis. And that counts for federal and that counts for state. This works best if you are in a state like Texas and Nevada and Florida, where there are no taxes. If you're in a state like mine, it absolutely sucks, and I end up paying around 40%. So if I make 100, I pay 40% in taxes, but the taxes are not due until tax season. So I'm able to utilize the revenue that I'm making and reinvest it, and hopefully that offsets my taxes when it's time to pay my taxes. Now, this strategy I love because the worst case scenario is you have to sell your shares at a comfortable rate. So you're not losing money. You're just selling shares at a certain strike, a certain price. So let's say you're willing to sell Palantir at $20 or $19 or $15 or $50. It doesn't matter. And the worst case scenario on the downside, you actually purchase the shares. The worst part is if you sell your shares of Palantir, let's say $18, but Palantir is $18.50, well, you lose out on that, 50 cents, for example. And let's say you're saying you're going to buy Palantir for $17, but Palantir is $16.50 when you're ready to buy, well, you lose out on that. On the bright side, all the premium that you collect offsets your total cost basis for the stock. I'm going to show you an example of what I did, how I made $10,000 last week. It took me 1 minute of time. But before I do that, let me explain to you something else. I had my son's account. I did the same exact strategy. I've been doing it over the last year, and I collect premium for him every single week. When Palantir had a run up all the way to $21.50, I ended up having a sell at $18.50. So I sold my son's shares at $18.50. And every single week I was saying I'm willing to buy at $18, $18, $18. I believe I sold in November 3rd. It took me 1 month, but every single week I'm collecting premium. Remember, offsetting, reducing my total cost basis. Finally, last week, I ended up rebuying shares of Palantir for him at $18. So I sold at $18.50. I bought back at $18. I saved myself 50 cents on my cost basis. On top of that, I was collecting premium every single week on my sells until I actually got assigned and I had to sell my shares at $18.50. And I was collecting premium for 4 weeks straight on my cash secured put saying that I'm going to buy shares of Palantir. This works best if you are selling your shares above your cost basis, this way you're not losing money and you are buying back below the price that you ended up selling. This is a fantastic, fantastic strategy, and I want to show you an example of what I did last week. Last week, I put in a trade. I put in the trade on 12/6, almost at the time of closing at 3:43 p.m. I said that I was willing to buy Palantir at $17 a share on 12/15, which is going to be literally this coming Friday. So I have this next 5 days. And I am willing to buy 200 contracts. 200 contracts, every contract is 100. 200 times 100 is 20,000 shares. I ended up collecting $10,000. The premium that I collected was 50 cents. So if I buy my shares at $17, I'm actually paying $16.50, not $17. How do I know this? Well, it's 17 minus the 50 cents premium that I'm collecting is going to be $16.50. What I'm going to end up doing is, if Palantir is going to be above $17, I'm going to do literally the same exact thing and collect another $10,000 plus or minus, depending on the premium. But let's say Palantir, for whatever reason, goes down to $15 or $16 or $16.50, right? And you're going to be like, Adam, I don't want to pay $17 if Palantir is, let's say, $16 because I got a discount. No problem. There's a little button over here that says roll this option. When you press roll this option, automatically what's going to happen is it's going to roll it to the next possible date. So this contract ends December 15th. It's going to roll it automatically to the next week. If I take the contract that I already have, instead of doing it at $17, let's say I want to roll it to next week, right? So Palantir's share price is $16. I don't want to pay $16, so I'm going to wait next week. Well, I could do this one right here. If you click on this and then you press continue, I would literally collect another $3,188. This is for another week, to say, instead of waiting until December 15th, let's wait until December 22nd. And then I'm willing to pay $17 for Palantir. Now, I'm hoping the price of Palantir is not going to be 16, it's going to go up to like $16.90. This way, I'm paying 17. Remember, I already offset my price by 50 cents. That brings me to $16.50. And I just offset my price again. Remember, I'm collecting another 36 cents. Now, the 36 cents is not exactly 36 cents because my contract is worth 20 cents. I'm getting 36 cents. So this new contract offsets the 20 that I owe on it. I'm collecting 16 cents. 16 plus the original 50 is I am getting a 66-cent discount. Now you might be like, Adam, that's all great, but I don't feel comfortable because Palantir is trading at $16 and I still don't want to pay $17. No problem. Click this one right here for $16.50. Now you are saying I am willing to pay $16.50, which is actually 16 because you collected 50 cents last week off this price, and you're going to end up netting another 3 cents right here. Remember, your contract has a value of 20 cents. You're going to be collecting 23 cents if you press continue, and you're going to collect $588. Guys, this is absolutely freaking massive numbers. Now, let me show you something else. Guys, this is Palantir right here. I want to show you something. Trade Palantir options. If you don't want to do this weekly, it's really simple. There's a really good play that I was telling people about. If you're going to go to June 21st, 2024, and you go all the way up, there's a $40 strike. So you are saying that you are willing to sell Palantir at $40 by June 21st, 2024. For this, you will collect 23 cents a share. 23 cents a share. You're going to then say, well, Adam, what is my percentage to win? What is my percentage to win? The percentage to win is very simple. Right here, you have something called the delta. Delta is whoever is buying the contract from you has a 7% chance to win, which means you have roughly 93% chance that this will not hit $40 by June 21st. But if it does come close to $40, all you got to do is roll the contract. It is literally that simple. I don't want to say it's free money, but when you do this strategy, you understand the risks is so minimized. Why? The worst that happens is you have to sell your shares and then you rebuy. Or the worst that's going to happen is you have to buy the shares at a reduced price because you keep collecting premium. And that's it. Rinse, repeat over and over and over again. Usually the best premiums you're going to get are weekly premiums, but there's also a lot of fluctuation and headaches. There's another way to play this, and another way to play this is implied volatility. And implied volatility usually goes up during certain times of uncertainty, for example, earnings. There's a way that during earnings, you end up selling covered calls or selling cash secured puts. And then when implied volatility goes down, you end up buying out your contracts and then you make the difference. Guys, that's a little too complicated. I think I lost most people already. I don't know how to bring this content out for most people. A lot of you guys are saying, Adam, can you please explain the taxes? Can you please explain the strategy? I'm explaining it as best as I can. I do have channel membership down below. It's $3 a month. If you guys want to support the channel and you guys want more content specifically on how I make money every single week, and unlike 99% of the YouTubers out there, they will not show you their trades. I am showing you my trades in this specific strategy that has been making me fucking bank. And if you guys want to learn more, let me know in the comments down below. I'm as real as it gets. I'm trying to show you the strategies. None of this is financial advice, purely entertainment and education. But it is possible not just to wait for Palantir to go to the moon, but ride that moon rocket all the way up selling covered calls. You don't have to be greedy. You don't have to sell on the money. You can collect a smaller premium and be relatively safe in the 90% that you don't have to sell your shares. And again, if it ever comes to the time that you do have to sell your shares, all you got to do is roll the contract. This strategy is not for everybody, but this is a fantastic strategy to maximize your gaining potential of shares. And if you're already willing to buy Palantir in the dip, let's say you want to buy at 15 or 16 or 17, it doesn't matter. Why not collect premium? No matter what, you're collecting premium. If the price does not hit how much you want to pay to get back into Palantir or add to Palantir or, increase your shares of Palantir, then you don't have to buy it, but you still keep the premium. That $10,000, it's mine. Listen to what I just said. $10,000 just to press a few buttons. Of course, it gets a little more complicated. You got to understand that. But the worst case, I buy Palantir at $17. The worst case. I'm cool with that. Thank you so much. If you have questions, ask as always. Have a great day.